So we're going to talk about college financial aid and why this year is different. I'll be doing the presentation along with my colleague Mike. And actually, Mike is going to start. So why don't you take it away, Mike?
Okay, thanks very much and welcome everyone. Thank you for joining us and spending part of your lunch hour with us. Uh, my name is Mike Dunn. I'm a certified financial planner, and along with David Haas, my colleague who you've just heard, also a CFP, we're going to take you through a short presentation on applying for a college financial aid and why this year is different. So David, if you can move to the next slide, please. So a little bit of background on us. We represent Cirrus Financial Advisors, a registered investment advisor. We're independent, based in Franklin Lakes, New Jersey, in Bergen County, just a short hop from those of you who are joining us from Rockland and Westchester. We help clients with retirement planning, investment management, and today's topic, education planning. In particular, we've developed a product called College Money Match, which you see listed at the bottom of this slide, and which David will chat about a little bit further in the presentation. If you can move to the next slide, thanks. David, do you want to talk about your background, or shall I?
First, I have to unmute. Yeah, I can just mention. So I founded this firm in 2015. I actually started in engineering, but got an MBA in finance and a certificate in financial planning. And besides running this firm, I am also education director and president-elect of the Financial Planning Association of New Jersey, a organization of about 600 financial planners, part of the overall Financial Planning Association, national organization. I developed the College Money Match process to help parents make better college choices. The idea is to understand what you might be paying for college before you start, and figuring out how to pay for all 4 years. I put my own children through college before I did this, so I certainly made some mistakes, which I now know. Also, I am a frequent speaker, some local organizations. I've also been quoted in articles on CNBC, MarketWatch, Fortune, Reuters, and other locations. Mike, why don't you go ahead?
Thanks very much, David. So you can see my background here as well. I would say that the most relevant experience for a topic at hand is that, like David, my wife and I put our daughters through college, also graduate school, and one through medical school. And so we've got experience, practical experience before we started offering this advice to others. I think David would agree with me that one of the big things we didn't do back at the time, we both assumed that we wouldn't be eligible for financial aid. So neither of us filled out the FAFSA form, which, in hindsight, was a mistake. It's possible that we wouldn't have been eligible for need-based aid, but it might have opened up some other options. And in fact, David, if you can move into the next slide. So before I launch into this outline of what we're going to be chatting about with respect to the changes to the FAFSA, I heard a really amazing statistic in the news this morning, and I had to look it up because I wasn't sure I heard it correctly. You may have heard of a nonprofit group called the National College Attainment Network, NCAN, I guess. And they've got statistics that show that of the most recent high school graduating class, the class of 2021, 57% of high school graduates filled out the FAFSA. Sounds pretty good until you look at the other side of that equation and realize that over 40% didn't fill it out. Now, not everyone goes to college, of course, but that's a pretty big number. And it means that people probably left money on the table. If you don't fill out the FAFSA form, as you may know, you can't qualify to receive a Pell Grant or a National Direct Student Loan. And for state programs like the New Jersey BEST program, you've also got to fill out the FAFSA. Same goes for the New York State Excelsior Scholarship. So if you get nothing else from this presentation today, and I'm sorry, this is very recent news, we would have put this in a slide if we had heard about it sooner. Please encourage your students and their families to fill out and submit the FAFSA this year and each year that they're in college afterwards. Having said that, here's what we're going to outline for you today. We're going to talk about the changes to the FAFSA application process, which were brought about by the FAFSA Simplification Act, which was passed in 2020. It was phased in over a few years, but this is the last year of the phase-in. So effectively, everything that was passed becomes effective with this upcoming application year. As part of this, they've developed a new FAFSA form. I should say they're developing it because it's not available yet. And to go with it is a whole new software system backend. They've made the FAFSA shorter, and they've made it mandatory that you connect with the IRS database so that when parents are asked to fill out their income information, they don't have to go and fill it in manually. It will automatically be transferred from their tax return that they filed with the IRS. A big change is now that they've changed what was the expected family contribution, which, as you know, is their calculation, their formula for what they think a family can afford to contribute toward the cost of their child's college education. They're changing that to something called the Student Aid Index, or the SAI. Kind of basically means the same thing, but they've changed some of the rules that go into determining that, which I'll touch on and which David will touch on a little bit later in the presentation as well, including some changes to the Pell Grant calculation. With all of the sweeping changes they've made, excuse me, I'm just going to take some water. The FAFSA form itself, usually available on October 1st, won't be available until December of this year. So it's going to push things back, and it could be an interesting year in terms of timing and when people hear about their financial aid packages for the upcoming college admissions year. So do you go to the next slide?
I'm fine, I'm watching.
So we're assuming some familiarity with the college financial aid process. And here's a list of some of the terms that are relevant. I'm not going to walk through them in detail. If there is something in this presentation that doesn't sound familiar to you, please pop a question in the chat box and we'll answer it as best we can. So David, if you can move to the next slide, please. So just a little bit of background on FAFSA simplification. It was the Consolidated Appropriations Act that was passed by Congress in December of 2020. As you recall, we were right in the midst of the COVID-19 pandemic. Part of the CAA Act included something called the Future Act, and this is a great one. Future, in this case, stands for Fostering Undergraduate Talent by Unlocking Resources for Education. And along with that was the included in that as well was the FAFSA Simplification Act, which included a lot of the sweeping changes that we're going through and will experience as we go through this application year. And of course, Congress in their infinite wisdom realized that they needed to make some corrections the following year. So they passed Corrections Act in 2021. Next slide, please, David. So this is a chart taken right from the federalstudentaid.gov website that shows the phase-in of the changes to the FAFSA application process. I'm not going to walk through all of these in detail. I'll focus on the two rightmost boxes. So for the award year 2023 to 24, for example, some helpful changes that were made, they made it shorter. They removed questions on drug conviction or a student's selective service background. They included the demographic survey, taking a look at that, and the student, of course, can decline to participate in that if they prefer not to answer. They've expanded eligibility for Pell Grants. We'll talk about that in a couple of slides. Perhaps they've either introduced or expanded the college's ability to use their quote-unquote professional judgment. So when a student applies for financial aid, a college will of course look at a formula that comes out of the FAFSA to produce the student's SAI, for example. And David will chat about how that's calculated in a few slides as well. But a college can look at all of that and then say, well, you know, perhaps there are others, we have flexibility to use our professional judgment to perhaps offer a different college financial aid package than might be indicated by the materials included in the financial aid application of the student and their family. Moving to the rightmost box, some of the things that I've touched on already, the modified FAFSA form will be coming. We've seen glimpses of it, but it's not all complete yet, and we won't know what it officially looks like until December. As I mentioned, the student aid index concept replaces expected family contribution. You can kind of think of them as the same. I find it easier to think about it as in effect still as the old term, the expected family contribution. They've expanded Pell Grant eligibility, very helpful. They've also, with this direct data exchange with the IRS database that I mentioned, should result in fewer students being selected to verify their information. So this verification selection criteria should be less of a burden on applicants for this coming year. Should be, we'll see. Next slide, please, David. So you know what they do with the expected family contribution. Once the FAFSA is submitted and the formula calculates what would be the expected family contribution, now called the student aid index. Colleges start with a cost of attendance. They subtract out what they think the student and their family can contribute toward the cost of college education, now known as the student aid index. They also subtract out other financial assistance, say outside scholarships or grants that a student receives, to arrive at a student's need. And then they determine what financial aid package to offer based on that. How much need will they cover, and will it be in the form of grants, loans, work study, things like that. One of the new concepts this year is that the SAI can now be a negative number. I'm not entirely sure what that means yet. Obviously, it should mean that a student and their family could qualify for more financial aid. It doesn't mean that this negative $1,500 is, which is the negative limitation, is negative $1,500. It's kind of a score. It may turn out to mean that, but we'll have to see how the process works this year. Next slide, please, David. So the next couple of slides, this and the next one, touch on Pell Grants, and I'll walk you through generally how the guidelines work. So Pell Grants are based on need. Being a grant, obviously, they don't have to be paid back, which is great. And it's determined by FAFSA data. So as I mentioned at the outset, the importance of filling out the FAFSA really comes into play if someone could be eligible for a Pell Grant. If you look at the box on the far left, the maximum Pell Grant goes to the lowest income, or those with the most financial need. Those would be people who didn't have to file a tax return, for example, or it's based on, if they did file a tax return, the amount of their adjusted gross income in comparison with the federal standard for poverty guidelines and their family size. Looking at the other end of the spectrum, the far right box, the minimum Pell Grant is not going to be as much as that, the number that you see in the leftmost box. And by the way, the maximum Pell Grant that's listed there is for 2023. We don't know what the new maximum will be for the upcoming 2024 year. Presumably higher, hopefully a bit higher than that. The minimum Pell Grant is going to be a smaller, perhaps a small fraction of what that is. Nevertheless, it's free money and it helps. Also based on information provided by the parent's tax return, adjusted gross income in comparison with poverty guidelines and family size. And then the calculated scheduled Pell Grant, I won't spend too much time in this, but it is explained in a bullet point up above. Based on the student aid index, income plus some assets, but not necessarily the family size. So we have a table that illustrates probably the contrast between the leftmost box and the rightmost box, which is here on this slide. So this is a sample table, and there are lots of tables for different family circumstances. So this one applies to a dependent student, so a student dependent on their parents' income and assets, a student located in we'll call it the lower 48 plus DC. And it goes by family size, as you see on the left column. The 2022 federal poverty guideline for of income for families corresponding to each family size that you see on the left are these numbers that you see in this column. So for a family of two, the poverty guideline is $18,310. To determine whether a student is eligible for the maximum amount of Pell Grant, they take a multiple of that poverty guideline and say that a student can qualify to receive the maximum amount of Pell Grant based on their family size if they have income lower than the amounts that you see in this middle column here. So let's say for a family size of 8, the student is a single parent. The single parent can earn up to $104,000. Or these students, perhaps, the parent can earn up to that much, and they can qualify to receive the maximum amount of Pell Grant, which, as I mentioned, could be in the neighborhood of $7,000 to $8,000 a year. On the other hand, for the minimum Pell Grant, a fraction of that, they allow a higher income guideline, a larger multiple of the federal poverty guideline. So, for example, that same family of 8 can still qualify for some amount of Pell Grant, let's say, not the maximum, if that family's single parent earns up to $151,548. So I think the spirit of the rules are generally, let's get more people in college, let's provide additional resources to help them pay for college, but you have to apply, and they're trying to make it easier to apply. So with that, we'll take a quick break to see if you guys have any questions before I turn things over to David to talk about the calculation of the student aid index, and then he'll take us the rest of the way from there as well. So please feel free to pop questions into the chat box.
Thanks,
If we
Mike.
don't see anything, we'll carry on.
So if anybody has any questions, please enter them. I will just say, this is an important difference between the old calculations and the new calculations. So the old calculations, the Pell Grant was completely based on the EFC that was calculated, which was based on both income and assets. And as you see, we now have this weird situation where the maximum Pell Grant is only based on income, not assets, and so is the minimum. But if it's something in between, then it's based on income and assets. This is actually kind of a strange situation. We'll see how it works out.
David, excuse me. We have a couple of questions that have just popped in.
Okay.
Someone has asked, Kelvin has asked, what is the calculation for the married? Because this apparently is for the single.
Yeah, so a married student, which is I assume what you're asking about, a married student is automatically independent.
I think they need a married family because this is a single parent.
This is a single parent family, yes.
Yes, I'm sorry. So the married, the married parent situation is just a different table. So I don't have that table to show, but I can
include it when you send this to everyone.
Yeah, I can include it when I send it. The FSA has published all of these tables, so
I think that would be great. Yeah, and then someone asked, Jennifer asked, what does AGI stand for?
So AGI stands for adjusted gross income from your tax return. So if you're a non-filer, you will automatically get the maximum Pell Grant. So you don't even have to worry about the table. And as soon as you file federal taxes, then you will have an AGI, which will be on one of the lines of your tax return. I forget which line.
Yes.
So,
Generally speaking, it would be income, say, from wages and salary minus a couple of what they allow as adjustments to income, say a deductible contribution to an IRA or something like that. Not everyone has adjustments to income, so sometimes adjusted gross income is the same as their total income, but there may be some allowable adjustments that may reduce their total income to adjusted gross income.
right. And I'll be talking about some aspects of this in a little bit further in the presentation. Anybody else have any questions? Okay. So anyway, so let me go on, and we'll talk more about the SAI and what goes into it. So I don't actually have the calculations for that here. It's actually too complicated. I went through it on a webinar from the federal government, and boy, it's complicated. So you rely on the software. It can be done by hand, of course, but there's all kinds of allowances and table lookups. It's not a simple formula. So they call it the FAFSA Simplification Act, but it's certainly complicated the calculations. It's only the form itself that you could say has been simplified. Anyway, so SAI determination is based on income and assets. So I'm really talking mainly about the changes here. So the parent income allowance has been increased. For a family size of 2, it's 23,330. For a family size of 4, it's 35,870. So that's income that's not counted at all. So in other words, if you have a family size of 4, that first 35,870 of income is simply not counted at all. The student income allowance has also increased. It's now $9,410. That's important. Students have summer jobs. They're earning income. So it was in the past that income allowance was a lot lower. I actually forget how much lower it was, but it was quite a bit lower. And then students would earn income from jobs, and it would count against their aid, which just really didn't make sense. So now that income allowance is quite a bit higher. Child support is now treated as an asset. So this is simply a calculation feature. Assets are counted at 5.64% towards calculating the SAI. So child support used to be treated like any other income, and now it's being treated at a much lower amount. That's basically the takeaway. Retirement savings contributions are not counted. So if somebody is maxing out their 401k, and frankly, if they're kind of borderline with getting aid, maxing out their 401k is a great, completely legal and straightforward way of increasing the possibility of getting financial aid. And it's good for your retirement too, so all good. But the SAI does not include retirement savings. And it also doesn't include untaxed income. So untaxed income is really it's a feature of people who are in the military when they get housing allowance, and in the clergy also gets housing allowances are untaxed by the government. This used to count against aid, and it no longer does. The other thing that's in untaxed income is gifts. So gifts from grandparents, for instance, who want to help their grandchildren with college. This used to count against aid. It was considered untaxed income. You needed to list it in the FAFSA, and that is no longer the case. So it's good if you have wealthy grandparents or aunts and uncles who can help you provide for college. So on the asset side, we're talking about what you own. and it includes savings investment accounts. It also includes 529 accounts, college savings accounts. Now it will include the child support received. For the FAFSA, it used to not include small businesses with less than 100 employees. Now it includes all small businesses, and you're supposed to declare the net worth of your small business. So if you have a business with multiple employees, maybe you have a good idea about what your net worth is of your business. But I can tell you, I'm a small business owner, and I have no idea what my small business is worth. It's not fair. Nobody's asking people to do a formal appraisal of their business, which would probably cost money. They're asking for an estimate, but there's no guidance as to how to provide that estimate. So you just have to do the best that you can. And my thoughts there is that families should be using some sort of a methodology. They can make it up, but maybe it's something times the revenue, yearly revenue, or maybe it's just what the business owns. If the business is totally based on somebody's work, like an Uber driver, that's a small business. That's really worth nothing if the person walks away from it. You can't sell a business driving for Uber for any money. So I would say the net worth of that is zero. But there's no guidance. So it'll be very interesting to see. A certain number of families are always flagged for verification, and we'll have to see what the verification process says about this. Don't know. This is a really big one. So there used to be an EFC discount, essentially, for multiple children in college at the same time. So families with multiple children, each individual child would have a lower EFC. With the new FAFSA and the SAI, there is no longer a reduction for multiple children in college. This will affect many, many families. We don't know. Colleges may be able to increase aid using professional judgment. Really not clear to me that that's within the criteria for professional judgment, but I guess it's possible. I have to point out that the CSS formula, so, financial aid basics, some schools only require the FAFSA, some schools require the FAFSA and an additional CSS form. It's typically the private colleges and universities require the CSS. So that CSS formula, they may, or as far as I know, will still have a reduction for multiple children in college. They haven't renamed their output as the SAI, so I guess it's still an EFC. But their SAI or EFC is still going to be reduced for multiple children in college. So it's possible in some cases you'll get actually more aid from a private college or university than you would from the public one that only uses the FAFSA when there's multiple kids in college. But of course, they're all more expensive. So the actual net cost may still be higher. So other important SAI changes having to do with divorced parents here. So the divorced parent used to be the one that's responsible for filling out the FAFSA, used to be the custody parent. For joint custody, you could choose. And by the way, this has nothing to do with the custodial arrangement. Custody here was defined as the number of days in the year that the child slept in the parent's house. But now it's been changed. So now it's the parent who provides the most support. This is monetary support. So one parent might have custody and another parent pays child support. It's not automatically the child supporting payment parent, because of course the parent where the child sleeps is also providing a lot of monetary support. Child support's only part of that. So this is also something that is very unclear. And I think that it's a case by case basis what the parents decide. Of course, if you want to maximize aid, you want to choose the parent that has the lowest income. Even the parent that has the lowest income, you may be able to say that that parent provides more support. So if that's the parent who's custodial. But at any rate, this certainly complicates things, and it's unclear what verification is going to do here as well. And then another change is the mandatory use of IRS data retrieval. So students will only be eligible for aid if the parents or any taxpayer who needs to fill out the FAFSA agrees for automatic IRS data retrieval. Income information will not be asked on the FAFSA form. Now, if it's a foreign taxpayer, so you could have a student who's even a U.S. citizen student whose parents are working overseas and wants to go to college in the U.S. In that case, that the foreign taxpayer can fill out a paper FAFSA form or provide the income information later, but there's mandatory use of IRS data retrieval. So there can be issues where students' parents refuse to give permission. I've seen this. I've heard about this. Parents, don't want the IRS information to go to the schools. They think it's going to the schools. It's actually just going to the federal government. Although some of that information does go to the schools, I guess. But that means that the student is not going to be eligible for aid. This is going to cause problems. And I am not sure. So student loan eligibility. For the federal student loan, you have to fill out the FAFSA. I am actually not sure if you refuse the IRS data retrieval, you may not be eligible for any student loan, subsidized or unsubsidized. Schools are allowed to use.
David, excuse me, I don't
Yes.
want to interrupt. This is an important question somebody had that is impacted by what you just explained. Vanessa asked, how will the IRS data retrieval affect families where the parent does not have a social security number and may not file taxes? Do you have an answer for that?
Well, the answer for that is going to be probably that's going to come out in professional judgment. So even if the parent doesn't have a social security number, they probably have to agree to the IRS data retrieval. I know this can cause problems, so maybe that's going to cause a problem where the FAFSA can't be entered. You do have an option to still file a paper FAFSA where you can sign that information. I believe that there's a requirement that the student has to be, the student has to have a social security number. But if the parent doesn't have one, I don't know. That's going to be an issue.
I was just looking up something about this, and I guess it really will depend on the student's family income situation. If you don't have a social security number, you can still file taxes because you can ask the IRS to give you a tax identification number. It doesn't have to be your social security number. But if their income is
and
low
you could
enough,
probably use that almost certainly. We're using the term social security number, but right, that IRS identification number can be used.
Yeah, so I guess we're gonna have to see how, when you're filling out the FAFSA this year and you haven't filed a tax return. On one hand, it sounds like, yes, you should be eligible to receive, let's say the maximum Pell Grant, but you still need to fill out the FAFSA to be eligible for that. So we're gonna have to see what the form allows you to do, you know, to, I guess, submit it without IRS data retrieval, if that's
And if we
possible.
have a situation with undocumented parents not paying taxes, of course, that is illegal. Um, the question is going to be, what's their income? And in that case, the income is going to be, zero because they didn't pay taxes. Is this going to be used for catching people who are cheating on their taxes? I don't know. I think it's not likely, but really not sure. It's the IRS is not getting the information, but it's the student aid people who are getting this information. Okay, so let me go on to professional judgment. So professional judgment is basically used for special circumstances. So maybe a family had a job loss, divorce, death of a parent, homelessness. This situation that we're talking about with undocumented parents and not filling out the tax returns may be part of this. Basically special circumstances. So in those cases, the schools can use professional judgment. There is no place in the FAFSA form to put any notes or any comments. So basically, the student should notify the financial aid office of any issues that require professional judgment. I would suggest doing it after the FAFSA is filed. The colleges, are set up to deal with this. And even after a financial aid determination is sent, you can send an appeals letter. You should do that soon after the financial aid determination is made. But if that financial aid determination is made on information that's not accurate for one reason or another, that's where professional judgment comes in. Another thing I didn't list on here was medical, medical issues, terrible medical bills that the parents are paying. That's not clear on the FAFSA form, so you can basically provide that information to the schools, and they are not allowed to change the formula, but they are allowed to change the inputs to the formula. So they can, for instance, take those medical bills off the income and recalculate the aid. So there is a lot of leeway there, but any professional judgment has to be documented by the colleges. So as we were saying, there is all new software and calculations, and that's really the reason why the FAFSA is being delayed. It's being delayed from October 1st to sometime in December. They actually have not announced a date. So I wouldn't read this as December 1st because this is the government. I would maybe read it as December 31st. So that's very unfortunate. That I said might interfere with early action and rolling admissions. Well, it's certainly going to interfere with the aid packages. So, students should continue to apply early action and rolling admission, but they're not going to get an aid package until the FAFSA process has gone through. There are going to be problems, new software, new systems. Colleges will maybe not understand what they are allowed to do under professional judgment. You'll want to make appeals. So you just have to assume that there are going to be problems in this process since it's the first year with the new process. So CSS schools really haven't announced any changes. They haven't changed their formulas. As far as I know, they're going to continue to lower the EFC for multiple students. Colleges have said that. it's possible, as I said before, that some CSS schools will offer students a better deal, certainly more aid, which is unusual because that the CSS is a more inclusive questionnaire and counts things that FAFSA does not count. But for many families, they might find that the CSS schools provide more aid. But those CSS schools are almost all more expensive schools. So the FAFSA schools, they are most likely going to delay financial packages until the FAFSA is available. I think that the formulas have been published. They've been published already today. So it's certainly possible that the schools could provide some kind of provisional number if the parents provide that information to the colleges. As far as I know, none of the colleges are asking for that right now. The FAFSA form is used for CSS as well. And of course, the information is used for Pell Grants. So this is going to affect the CSS schools as well as the FAFSA schools, as far as delay is concerned. And I already talked about the increased use of professional judgment. So things to remember. As I said, aid can be forecast. The aid packages, there are a number of online services that do that. With our service, we have software that does that, and we're using the new formulas. Those are in place. The FSA or studentaid.gov, they have a FAFSA forecaster on their website, but it is still using the old numbers right now. They will update that at some point, and then that will be a useful tool as well. I just want to remind everybody that merit aid can sometimes be a more meaningful situation than needs-based aid. So if you have a very smart student, even if that student is in great need for aid, colleges can provide excellent merit aid that may be better than the needs-based aid. You typically don't get both, you get one or the other. The nice thing about merit aid is that it's renewable without reapplying. So also you have situations where parents are, maybe a job loss occurred. They're in a 1-year situation where the student's going to get needs-based aid, but that student might get merit aid as well. I would head towards the merit aid because that's renewable without reapplying. The parents are in this 1-year bad situation. Things are going to be better the next year, and they may get needs-based aid 1 year, but no needs-based aid in following years. So I would very much look at merit scholarships, merit aid. I already talked about the small business evaluations that are hard to prove. CSS does ask, well, some of the schools ask very detailed questions about small businesses. Northeastern, I had one of my clients apply to Northeastern with a small business. You could not believe the detailed questions they asked about that small business. And so at least, FAFSA is not doing that, but then they also don't have any basis for the valuation. And I already talked about that it can be hard to prove which parent provides the most support. So just mention a little bit about our services. It's really a combination of software and coaching. And the entire idea is we want parents and families to make smart decisions about college. What's a smart decision? It's a school that you can afford. It's having a plan to pay for that school for 4 years. It's not messing with people's retirement. It's not taking out huge loans. And, we do that by helping parents find a college that's a good financial fit as well as an academic fit, providing that budgeting help. We don't sell products to evade or to mislead colleges. That's not where we're at. And frankly, we don't even handle things like sports scholarships. There are specialists who do that. That's not something we would do. One thing we do is help writing financial aid appeals letters. That's become increasingly important. Turns out that that college can be bargained for, especially with merit aid and even with financial aid. If you can come up with reasons to provide more financial aid for valid reasons, the colleges are often receptive to that. Not the state colleges so much, but certainly other ones. And how can we help you in your high school? We'd be happy to chat with your families about their situation and our services. We'd be happy to do a talk for College Financial Aid Night. We have one that we do pretty regularly on understanding financial aid. In fact, we're going to do this as a webinar on October 11th. The URL to sign up is down below. And we want families to be informed. We want the students to go to a college they can afford. There are some resources here. So our webinar, we do this fairly regularly. We did it as some library seminars this past year, but we've done it before as a webinar, and there's a YouTube video. So that's the first one. The second link is a financial aid toolkit that the government has. There's a lot of useful information there. The FAFSA form, the online FAFSA form, is the third link. And the fourth link, if you're interested in the new FAFSA and what the questions are, the FSA did a presentation where they went through this in agonizing detail, every question, and that link will bring you to that presentation, and you can take a look at that. And that is all that I have, but Mike and I would be happy to answer more questions. And if you have questions after this or want to contact us, our contact information is in the slide. I think a couple people just dialed in, so I'll give you our phone number, which is 201-848-6802. And happy to answer questions. If you want to unmute yourself, that's fine, or ask in the chat.
David, if I can suggest, go back to slide 22.
Sure.
So just at the bottom there, we are doing a webinar for parents, October 11th at 7:30. There's the link for it. I can't remember if you mentioned it. I was focusing on a few other things on the slide, and then you went to the next slide, and I didn't know, or I didn't remember whether or not you mentioned it. So I thought I'd just re-emphasize it.
Sure. Yeah, I mentioned it. And, although this is aimed for parents, I know that, high school guidance counselors, you guys are really concentrating on the academic side of this and may not be super knowledgeable about financial aid. And this webinar would be a great way to become more informed.
So please, if you don't mind, make that available to your students and their families, and we're happy to be a resource for them and for you.
Okay, I don't see any questions in the chat. Anything financial aid related, be happy to try and answer.
Somebody just said thank you so much. And I suspect that there's a lot to think about here.
You're welcome, Jackie.
So I think what probably is the best thing to do, you're going to be sending this out to everyone today, right? Or not today, but I mean, you will be sending it out to everyone.
Yeah, we'll be sending it out. It may be next week before we can send it out. We'll have to see what the recording looks like. But yes, we'll be sending it out.
So, I mean, to that point, anybody who does think of something in the coming days or after they receive it, should feel free to just reach out by email or phone or whatever.
And good luck on this academic year. Unfortunately, the FAFSA thing is going to throw a wrench into the process, but you know, with the demographics, it's kind of a buyer's market for college a little bit. There's more college places than there are people applying overall. Of course, you know, the public colleges are still have a lot of applications, and as do the you know, the most selective schools. All right, then I think we will close things out. I don't see any more questions. All right, thank you, Mike. Thank you, Eileen.
Thank you, David. Thanks, Eileen. Thank you, everyone, for joining us. Good luck this year. Have a great year.
Great year.
All right.